Hello, this is Tom Cloud with this monthly precious metals market update. Don't have a lot. I appreciate the nice emails commenting. We're always trying to answer and educate you where you understand my world and our world more. But first of all, we start with the Federal Reserve hikes. Here we know there's going to be at least one or two more of at least 50 basis points. So you can have interest rates go up between now and the end of June, 20% of where it's already gone up. I mean, this is unbelievable. They're sitting there telling you the inflation numbers got no better, so they're going to keep raising interest rates till they cool the economy off. But this is not an economy of free spending. This is an economy of getting what you need for necessities. These are everything in the world is short of. Supply chains have wrecked the food market, the toilet paper market, everything out there you can't get. So everything is inflating. It's not like we had the Jimmy Carter inflation back in the late 1970s. So yes, think about it. We're telling you right now there's going to be a Federal Reserve interest rate hike of probably 50 basis points in June and probably 50 basis points in July. Could be one, could be less, or both could be more. Some people say it's going to take 2%, 1% each month just to do it. It doesn't take a genius to figure out what's going to happen to equity markets if this happens. Let me give you a great example. The Bloomberg Aggregate Total Return Bond Fund through the first 4.5 months of this year is down 12.2%. It's the biggest in history. The bond market has never fallen that fast, that quick in history. So bonds are going up because who in the world is going to put your money into a depreciating currency that backs these bonds? So this Bloomberg Aggregate Total Return Bond Fund, 12.2, which coincides exactly with the Dow. It's down 12% for the year, while gold is the only guy standing, just like it was in 07, 08, and 09. Gold was the only thing that went up. Today it's only up 1% for the year, 4.5 months. But how much better is 1% than a 12% loss in the stock market and 12% loss in the bond market? So you've got to think this through. You know what's going to happen. You've got to reposition yourself to get there. And we'll talk about the dollar in just a second, but we sit and we think about we want out of risky things in times of uncertainty. So what is that? That's gold. That's gold. Silver doesn't have it because silver is still an industrial metal. And by the way, it's down 8% for the year. It's the best buy I've ever seen in silver right this minute. Yes, it's down to $21, and it was $26 not too long ago. It was up for the year. Now it's down 8% for the year. But let me tell you, there's a shortage of silver coming like you've never seen. Electric cars are still going to need it. We're still going to have solar panels that have to have it in states like Florida. Are going to be doing all their energy with solar panels going forward. They're running big ads all over Florida TV telling you how they're going to produce energy for the future. So silver is a great place to buy. The price is down, the premium's up, but it's still worth buying if you think it's going an extra $2 or $3 is a lot, but it's nothing compared to when you can't find it. So be sure that you get in there and do that. I also want to mention what's going on in the diamonds that we've introduced to you. The ones that have called have been blown away by the opportunity to an NFT, a non-fungible token with a triple X grading from the GIA and GCAL, the two top labs in the world. But nothing else, call and we'll talk about it, where you can learn about this exciting product. The CEO of IceCap.Diamonds. I want you to look at IceCap.Diamonds and learn a little bit before you call us on the office if you're interested in having me call you. And I'm doing the calls at this points. If you let Jade or Dan know, they'll get the message to me and I'll call you. We'll talk about it. But the CEO is leaving Saturday and he'll be gone for 17 days. And it could bring big things because he's going to Switzerland, he's going to Dubai, and he's going to Singapore with a lot of opportunities and meetings. And this could change the diamond slope that now liquid for the first time ever. You can now have diamonds liquidated. You now have statements, just like you do for a stock account that updates your diamonds weekly. Not every day, but they update them weekly. So this is what you got to look at as these next days roll through. The food chain is getting worse. We're getting more and more concerned about what's going on with the fruit processing plants I mentioned 2 weeks ago. Just think, over 30 food processing plants have burned down, and 2 have been hit by airplanes, one in Covington, Georgia, one in Idaho. People, this cannot be a coincidence. We've got a war going on against food to make you more dependent. We're seeing it in baby formula, and you've got to look at it. You can say, oh, no, it's just circumstance. The government would never or let anybody do anything like this and get away. You're right. They shouldn't let them get away. This is major activity criminal that's going on. Talk to people, as I've talked about in the past, clients and friends of mine in the food business that bring in tankers from China. They've seen it go from 4,000 to 28,000 a tanker just to get the food here before it's distributed. So we're nowhere near seeing the end of inflation. And once again, all it's going to happen is going to push interest rates up, kill stocks, kill bonds, and keep sending people into gold, and which you need to be getting into as fast as you can. Because there's a lot of other things going on, but when the dollar turns, this is the last thing I'm going to say. When the dollar turns back, we've watched it go up from 95 to 103, 11% in 6 weeks. It's been a long time since the dollar's gone up that much, but it's caused by people moving out of stocks and bonds, parking their money for the short term, not concerned about making money, concerned about keeping what balance they have, but they're losing purchasing power. If you got inflation going up 8%, you're going to lose 8% purchasing power with that. Just read the definition of inflation right out of Webster's. So you've got to be ready to get over, and gold is money. Gold will be the one of the solving things when you go to some kind of currency. Gold will be backing it. So going back to finish my train of thought, if it's down 10%, the dollar's gone down up 10%, and we've seen gold go down 10% since it was up 11%, and now it's gone down. But here's what I can tell you. When gold turns around, not stocks, not bonds, when gold turns around, you're going to see it go up 3% for every 1% the dollar goes down. So if it just goes back 10% where it was 6 weeks ago, you're going to have gold at 2360. I really believe you'll see gold over 2,500 this calendar year, even though it's just over 1,800. It is a phenomenal time. If I'd have told you a few weeks ago that you could, when gold went to 2,050, that you could buy gold at 1,800, low 1,800s, you'd say, yes, I'll take that deal. Well, that deal is here. And I hope you'll use it to get your portfolio in a more position as they continue to print money. I'm not going into it this time because we're short on time, but I just don't want to go into this war and where the money's coming from. It's not in that $30 trillion deficit. It's just being created. It doesn't count. It counts in inflation. It counts in your purchasing power. It just doesn't count in the deficit. It's under special treatment. With that, I'll close by saying, give us a call and talk to Jade or Dan at 800-247-2812. If you want to talk about the diamonds, tell them and I'll give you a call. And I would do it as quick as you possibly can because I think you're going to see some movement. Almost all the clients that bought diamonds in the last 7 months since we started are up over 10%, and many of the ones that bought in July and August are up over 20% net, when the gold was down about 20% during that same time. It's about 40% difference. So anyway, with that, we'll bid you a farewell till 2 weeks from today. This is Tom Cloud signing off.